All right, guys, what's going on? This is Ryan, aka Cantor and Clark, and I just want to cover what was the topic of conversation this morning with regards to the CME futures chart, all right, and the gap that we had, and whether or not this was a gap fill. So, gaps happen in different markets for different reasons. Okay, with regards to the CME, it doesn't trade 7 days a week. All right, there is a gap in trading time from Friday evening to Sunday evening. But the underlying spot instrument or the underlying asset, Bitcoin, trades 24/7, 7 days a week. So there will be a gap as a function of the trading times. Okay, and in markets there are gaps that occur on low liquidity. Okay, high volatility. There are certain gaps that occur pre-market. All right, with equities. Okay, and post-market. But whether or not these need to be filled, there's not such a causal relationship, to say all gaps need to be filled. With assets that have trended positively over time, all right, assets that experience some type of positive drift, all right, if there is a gap down, just as a function of survivorship, all gaps down will have filled, right? So if we gap down in a market, we've continued to trend north afterward, then there's a high probability likelihood that the gap has filled. Okay, and in markets, we've seen that price searches out liquidity, and in a market where there's a high amount of volatility, all right, we will more often than not see that gaps will just fill by happenstance. All right, there are some arguments to be made for gaps needing to fill, right, to probe for liquidity, but I wouldn't say that we should give that too much weight, as there is not enough empirical evidence, I think, to support that it is a causal relationship and not just as I've said, a form of coincidence or happenstance in markets that are volatile or have trended positively over time. So the Bitcoin gap, right, that we had on the CME futures chart, right around 8,600, all right, we probed through that around 1 o'clock in the morning. Now, let's go over how the CME contracts work. So each contract is worth 5 Bitcoin. All right, so if Bitcoin is $9,000, just to do a rough estimate, $9,000, 5 times 9, that is your contract value. So $45,000. Now, if we look at the CME trading volume compared to just spot exchanges, what we'll see is that today, for example, the spot volume is around 1 billion, so just over 1 billion, and the CME volume is about a fifth of that, so around 200 million. So this is a more thinly traded market. Okay, there is an argument to be made for the fact that there's likely sometimes more cash at play because of the margin requirements of the CME compared to the popular derivatives platforms that only require 1%. All right, so the notional value is really high on BitMEX and these derivative platforms, whereas in the CME, these players have to put up more initial capital. But we can see that at 1 o'clock in the morning, all right, if we look at tensor charts, for example, and we have the CME feed, we could see that there was a total of 112 contracts sold. So around 101, it was 50 contracts sold at 9,320. Okay, at 101.29, it was 73 contracts sold at 9,270. And then lastly, 20 contracts sold at 9,290. So a total of 100 contracts, or over 112 contracts sold. Okay, and if we look at this value, this is around 2% of what the actual 24-hour volume is. So this is a pretty decent sized sell-off, right, in a thinly traded asset compared to the platforms that we are used to trading. So Binance, BitMEX, Bybit, and so forth. The CME is definitely more thinly traded, and just as a function of liquidity, we'll have these large spills, right, if we have a large amount bought or a large amount sold, right? In this case, it was a large spill because we had a large amount sold. So we saw that hit the tape. All right, this will be something that is displayed publicly tomorrow if you go onto the CME and look at the times and sales. But more positively, if we just consider the delta, right? So aggressively 55 sold, all right, 57 bought, okay. There is a positive delta here. So obviously, every buyer needs a seller, every seller needs a buyer. So the fact that this was sold off, okay, and it did gap below here, all right, and it was immediately bought up because, as a function of illiquidity, right, unless this was filled, right, with candle closes, okay, and we ended up down here, which we didn't, I wouldn't say that this is any cause for alarm. I wouldn't say that this is necessarily, trying to fill anyone's bags, or, there's argument whether or not this was used to create bullishness on the spot exchanges to fill shorts. I would stay away from narratives, right? What we know is that price came down very far, okay, and demand was there enough to bring the price all the way back up, right, in a short matter of time. So, futures contracts is very zero sum. Okay, there can be an argument made for equities where it is a positive sum because you have a share, right? If you're selling the share for capital, right? If you're buying a share, someone in both cases you can make an argument for each person gaining in some way, whether they're a short-term person or a long-term investor. But this, by all means, okay, it can be interpreted as bullish on the basis that when price came down here, it was immediately bought back up. So we have to keep this in mind. We have to keep in mind the overall liquidity of the CME. So again, 5 Bitcoin traded. Okay, if we consider that there's 5 Bitcoin per contract, and like I said, there was around, I think so that 50 sold, 70 sold, 120, and then another 20 sold. So in that moment alone, we saw 112 contracts sold, but there were actually more than that. Okay, and just as a function of illiquidity and having thinner books compared to the platforms that we trade on, this was the type of behavior we saw, right? So price immediately wicked down. Again, though, the demand stepped in, and we did not close through this gap. Okay, now there will be people that are going to continue to argue whether or not this was a gap fill or not, and I would say that that is not really necessarily worth focusing on. Okay. As we saw, that occurred down here. All right, we did not close through here. Okay, it looks like we did close this gap. We closed this gap. But again, there are some gaps down here that have not closed. Okay, and whether they're a $2 gap, okay, or a $100 gap, or in this case, if you're talking about whether or not it needs to close based on a candle close through or the wick. All right, we have probed this gap. Okay, and there is a case to be made for the fact that the probe actually taps into liquidity, and we did find liquidity and did find that demand, and we're immediately pushed back up. But I wouldn't spend too much time focusing on the actual argument about whether or not it needs to be closed or probed. Just look at it like this. Price came down, aggressively being sold, and was aggressively bought back up instantaneously. So this is a good thing, right? This is a positive thing. So that's that, guys. Hopefully that is a decently thorough explanation. If you want any of this information, you go on to Bitwise. If you want to see the Bitcoin trade volume, okay, again, the CME trades a lesser volume, right? Has less volume, all right. More margin requirements, though, all right. It requires more to be initially put up per position. So the notional value of contracts on the BitMEX platforms are going to be higher for the reason that they only require you to put up 1%. If you want to see any of the Bitcoin futures data, you could go onto the CME Group's page itself and see some of these contract details. You could go onto the times and sales, and tomorrow you actually be able to see how this tape looked, right? So when we talk about the 50 sold at 9,320, the 73 sold right below that, and then the 20 contracts sold. And then if you go onto Tensor charts, you can see what I just referenced right here, which was the buy versus sell delta. All right, guys, so hopefully that is informative. This is Ryan, aka Kenner and Clark with BlockRoots. As always, exercise proper risk management and trade effectively.